Hi, you're watching ET Markets Live. I'm Neha Vashisht Mahajan. Welcome to a fresh episode where we are going to discuss everything about what's happening in the markets, the market mood, and what is happening sectorally as well as stock wise, and much more. Joining me today is Mr. Kranti Batini, equity strategist at Wealth Mills Securities. Thank you so much, Mr. Kranti, for joining us today on ET Markets Live.
Thank you, Neha. Thanks for inviting me on your show to share my market views with you and with all the viewers of ET Markets.
Well, the pleasure is all mine. So let's quickly start with what's happening in the markets and let's start with global cues. So there's a possibility that Powell has basically hinted that there could be a possible Fed rate cut next month, and that has lifted the Asian markets in general. How significant do you think this could be for Indian markets, especially when we talk about foreign inflows?
Yeah, Neha, this is a much demanded thing right now. It's not the market view, but the demand for a rate cut is coming directly from the president. So that is the reason Governor Powell is on a tremendous pressure, okay, to go
Yeah.
for at least giving for a indication for a rate cut. But one thing is, of course, the indication brought cheers and also some kind of a positivity across the globe. It can be the US markets and also across the Asian markets. Indian markets coming back, okay, whenever market drifts below 25,000 level, that's what we witnessed on Friday. So there is a pullback rally, what we are seeing at this point of time. But we need to wait and watch market to sustain decisively above 25,000 level. That gives a clear indication. Coming back to the global cues, yes, the inflation pressures are still looming in US. But at this juncture, how the US Federal Reserve going to deliver a rate cut? We need to wait and watch. Of course, the guidance and commentary is towards the rate cut. But here the crux, the rate cut is becoming imminent right now. The reason is because of the uh, uh, cooling of inflation. The reason is whether it is the supply side or the demand side. Still, there is a lot of uncertainty around these inflation data at this point of time because of the tariffs. The prices, the household prices have been going up in US. At the same point of time, there is a threat that has been looming underlying in terms of the growth prospects of US is concerned. So the act of rate cutting is to support the economy or to cool since the inflation has been cooling off, okay, the rate cut they are taking. So there is a lot of divergence and dichotomy at this point of time. But always rate cuts are positive for equity market. Rate cuts are positive for the consumption. That's how
Right.
the markets are right now turning out to be. In especially India is concerned, the RBI Monetary Policy Committee, in its previous MPC, they are in a wait and watch mode.
Hmm.
The if the rate cut starts coming from US again after a brief pause, so that will reignite the kind of a rate cuts what we started. That might have some kind of a positive implication with respect to the rate cut cycle what we started in India. So by and large, it's a welcoming move, and whatever be the reasons, but we got an indication there will be imminent rate cut in the coming Federal Reserve meet.
All right. Let's come to IT stocks right now. So today in the markets, we saw that Reliance Industries and IT stocks drove today's gains. Do you see that? Do you see IT sustaining leadership in the next term when it comes to other sectors, given the global tech demand and currency trends right now?
I don't think so. The IT can we witness a sustainable rally? That's the major
Hmm.
question with respect to IT is concerned. But
Hmm.
what's happening is in IT at the it's making lower top and lower bottom.
Hmm.
So whenever there is a dip in IT, we can see because of the strong sustainable business models these companies enjoy. So we are witnessing some kind of a value buying and bottom fishing. We are witnessing in IT. At the same point of time, when there is a rally again, okay, there is come medium to short term. Whenever there is a lower top, we are witnessing some kind of a profit booking in IT in the medium to short term. I believe the
Right.
same trend can be continued for at least a next couple of quarters till the time we get a strong direction with respect to IT budgets in US are concerned. At the same point of time, with respect to the US growth prospects are concerned. So till the time, IT can be some kind of a subdued mode in the medium to short term. Neha, as a contrarian view, if the investors are a longer term investors who have more than 2 to 3 years time frame, because of the long term prospects of IT companies and also the resilience of Indian service sector IT companies are concerned. So, as a contrarian view, one can buy IT stocks on dips in a staggered manner for a medium to longer term. It cannot be for just for a short term. Short term, definitely it's avoid, but for long term, definitely buy on dips with respect to Indian large cap or mid cap IT companies are concerned.
Okay,
Yeah, Neha.
sorry, I was on mute. Yes. So, talking a little bit more about trends, with IT and metals outperforming while banks lag today, do you expect this sectoral rotation to continue, or do you think that financials will reclaim the top spot soon?
Yeah, what we are witnessing is this typical sectoral rotations we are witnessing on a weekly basis. But
Hmm.
the concern here is in the large cap, the sustainable rallies are not sustaining. So
Hmm.
the leadership rotation, what we are seeing, but these higher tops are getting sold out and fizzled out in the medium to short term. That's what we have
Hmm.
been witnessing typically in the medium to short term. That is the reason markets have been stuck up in a range. If you observe last 6 months, we are in the range of 24,500 in the bottom of the Nifty and about 25,500. This is the 1,000 point range. Market is consolidating in the medium to short term, but more of the action is in the very sectorial specific and stock specific action we are seeing, and we are witnessing plethora and long list of new IPOs getting added. So the more of the action is in these stocks than the indices is concerned.
Okay, let's not get too much into specific stocks, but let's talk about an overall sector. So, ICICI Bank was among the top losers today, till now. Should investors be cautious on private banks, or is this just a short-term profit booking when it comes to banking?
With respect to the banking and financial services are concerned, Neha, we started off well, but
Hmm.
in the medium to short term, what we are witnessing is we witnessed a strong exodus of funds by foreign portfolio investors. Just
Hmm.
look at the data, the way the foreign portfolio investors have exited Indian market. One of the key holding of the foreign portfolio investors are the banks. So at the same point of time, DIs have been safeguarding the markets, and they have been the continuous buyers in the market. So
Hmm.
as long as the this trade-off continues in the market, so we can see some kind of a consolidation in the banking sector. Uh, Once the foreign portfolio investors start coming back into Indian market, then we can see a sustained rally in the banking and financial services, because banking and financial services is the one of the uh, overweight sector for the foreign portfolio investors in India. So that is the reason this kind of a consolidation we are witnessing. Uh, for a medium to longer term perspective, definitely one can add banks in their portfolio. It can be public sector, large cap banks, or a private
Okay.
sector large cap banks. One can add in the medium to short term. And one of the lingering impact for the banks in the medium to short term, we started with the big bang rate cut, but
Yeah.
it taken a pause. That's where the consolidation is taking place at this point of time.
Hmm. Okay. So apart from the Fed rate cuts, what domestic factors do you see affecting the market mood, whether it can be positive as well as negative in September? What are the domestic factors that we need to keep an eye on?
One thing, Neha, we have come up with a big bang kind of a 2.0 of GST reforms. That's what the market
Hmm.
has could able to see a strong rally post August 15th announcement on the Independence Day. So right now there is a lot of anticipation and euphoria has been building up with respect to GST rate cuts are concerned and the slabs
Hmm.
are concerned. That has given the flip to the consumption theme and also the auto theme is concerned. So how this the GST reforms are going to take place? That's what market has been waiting. And also we have the IAP data, we have the GDP data that's getting
Hmm.
released during this week. So these are the factors one need to keep on their radar, okay, which makes the market to sustain at this range and take a leg up in the medium to short term.
Okay. So
and
before we
also
move to,
and also we
yes,
have the big tariff announcements that are going to come.
yes.
That's what everyone crossed their fingers how this entire episode of these tariffs are going to play a role. That's where
Hmm.
the markets are little bit nervous at this point of time and cautious at this point of time.
Absolutely. So, before moving to the last leg of our session for today, where we will be talking about Nifty levels, let's talk about how an investor can, approach the strategy for near term specifically. So, we have a lot of things going on across sectors. Everything is mixed right now. So, what do you think would be an ideal investment strategy at this point in time?
The best ideal strategy for these kind of markets, Neha, okay, one thing is the investor are delivery based, or the investors are the time frame is extremely crucial in this kind of a choppy markets. Suppose if an investor is coming for a time frame of more than a year, 2 3 years, okay, one can buy at dips. Okay, these dips are
Hmm.
extremely crucial to accumulate the chips to build the portfolio. And uh, for buying the every dip, okay, one need to have the fuel also, okay, the cash flows
Hmm.
also crucial. So one need to have a staggering the markets buying strategy also very important at this point of time. That can be, that is a systematic investment plan or a systematic way to buy the stock at dips also, one
Hmm.
of the way one can follow. At the same point of time, the typical tendency of these market, what we are observing is, okay, it's not a market where we can sit back and relax and sleep and we'll think about the long term. This market
Yeah.
is typically giving whenever the investment stock we select, when there is a momentum is that is getting built up, uh, one need to book some profit from the table also. Otherwise, if we are buying a stock at 100, it's going to 120. And if we are waiting for some more time, we'll be seeing in these pullback rallies again, we'll be seeing the stock at 90 rupees again. So whether to
Yeah.
buy the stock, whether the investor or a trader or anyone have the money to accumulate to buy at the dips, okay, that all depends upon the individual cash flows. So if the investor is ready to buy back the same kind of a stock
Hmm.
at the 90 rupees, okay, so uh, he could able to hold on to the stock and buy. Or else, okay, if there is any sudden spots in this market, taking back some profit from the table in the medium to short term, nothing wrong, okay, and entering the stock again. So these kind of a uh, anomalies we are witnessing, okay, in this market in the medium to short term.
Right. So now it's time to discuss about the Nifty levels for this week. What is your thought on the levels and how should we approach the markets this week?
With respect to Nifty levels are concerned, Neha, the one of the crucial thing right now one need to keep on the radar is Nifty sustaining the range of 25,000 level.
Hmm.
If Nifty could able to sustain the range of 25,000 level, that's what market trying to do today. We're just
Hmm.
way below 10 points from the Nifty 25,000 level. If the Nifty could
Right.
able to sustain the 25,000 level, it is crucial, sentimental, as well as a good indication zone. If the market could able to sustain the 25,000 level, the medium to short term market direction can be, the territory can be a positive territory. If Nifty drift below 25,000 level, okay, that can create some kind of a negative impact on the market in the medium to short term. So one need to keep on their watch list Nifty not breaching 24,000 level of 24,750 in the downside. And if
Okay.
Nifty could able to sustain the range of 25,200 level, we can see some
Hmm.
more leg up rally in the market in the medium to short term. So these are the crucial levels one need to keep on their watch list in the medium to short term. And any dip because of the global cues and also the geopolitical looming issues, the tariffs and all,
Hmm.
one can try to buy at dips also for a medium to longer term proposition.
All right. Well, this marks the end of our segment for today. Thank you so much, Mr. Kranti, for taking out time and joining us on ET Markets Live. It was a pleasure talking to you today.
Thank you, Neha. Always my pleasure. Thank you.
Thank you so much. Thank you, everyone.